Hey, this is Arthur Hill, Chief Technical Strategist here at TrendInvestorPro.com. And today I want to talk about navigating the stock market for the next 1,000 trades. Now, I get the term 1,000 trades from Nick Raj. He is the chartist in Australia down under. And Nick always takes a long-term rules-based approach, and that's what I want to talk about today. We're currently in a bear market environment, and personally, I think trading in a bear market is kind of like taking your boat out during a hurricane. You better have a really strong boat, or you need to be a really good skipper to navigate that hurricane. For most of us mere mortals, a bear market environment is when we want to be in cash and on the sidelines. So I worked at Oppenheimer and Company in the 80s, and in 81 and 82 went through a bear market. And it was a brokerage house with brokers. And one of the brokers always said, you need a bear market project. Now for him, a bear market project was taking tennis lessons or building a deck. But we don't need to do that necessarily. We can use this bear market as an opportunity to prepare for the next bull market. And so I would like to offer 3 tips for preparing for the next bull market. The first one would be to get a model to tell you when to be in the market and when to be out of the market. Models are very important because the broad market environment, as we have found out, is the single most important factor when it comes to trading or investing in the stock market. And we need a model to tell us when to be bullish and when to be bearish. It's important that that model be rules-based and objective. It shouldn't be any ambiguity. Now, a simple model would be when the S&P 500 is above its 200-day, you're in a bull market. When it's below its 200-day, you're in a bear market. The S&P is above its 200-day around 70% of the time. The other 30%, it's below. And as Charlie Bolello and Michael Gayed in their Charles Dow award-winning paper noted, bad things happen when you are below the 200-day moving average. Volatility picks up, risk picks up, and it is not a good time to be invested in the stock market. Now, that's a very simple model. At TrendInvestorPro.com, I use an index and a sector breadth model, and that triggered bearish at the end of February. The second thing is you need to get a strategy. So the model tells you whether you want a bull market strategy or a bear market strategy. Now, as I noted, a bear market strategy for me is to be on the sidelines to preserve capital. The late Richard Russell of Dow Theory Letters, he used to say, the one who wins in a bear market is the one who loses the least. Because again, bad things happen in bear markets, and that's what we're seeing. So you need to get a strategy for a bull market specifically. That can be trend following, that can be mean reversion. It is important, as with the model, that your strategy be based on clearly defined rules. Rules for your entry, rules for your exit, profit targets, position sizing, and so on and so forth. But it's important that it is definable, and it's something that you can repeat and do over and over again. The third aspect would be implementation of your strategy. So the model tells you when to be in, the strategy tells you what to do, you implement that by actually taking the trades. Now, clearly you've done a lot of the hard work by getting the model and the strategy in place, but it's still very hard to implement because there are going to be times when you're going to want to second guess the model. There'll be times when maybe you want to check the news to see if that refutes or validates a signal that the model has given you. And also might want to say, well, maybe I don't want to take this stop loss, it's really going to hurt. And that's when models don't work, when we stop listening to the models or following the models. So a couple things to keep you on track with the model is, I would suggest getting a specific day or time to look at your models, look at your strategies and your signals, and execute them. Second, I would not recommend checking the news after you check your models or your signals based on your strategies. And the third thing is look into getting a trading buddy or a group that is willing to put in a model, follow a strategy, and implement that strategy. That way you can get some reinforcement when you're trying to make some of those hard decisions. But again, I think we're in a bear market environment right now. I don't know how long it'll last, how far down it'll go. I'll just take the signals as they come. When the model turns bullish, then I will look to implement a bullish strategy. So thanks very much for tuning in to this video. Stay safe, please, and stay home.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.